We go on to the next one?
Yes. Next slide. So based on some of the reports that came in from Perry, when he was looking at the financial management systems, the trends that he saw was that the fiscal manuals didn't include policies and procedures for obligating cost or journal entries. What we are looking at in the reports from the agency is that your policies and procedures are not inclusive of all of the fiscal systems that need to be accounted for in how you're doing your fiscal practices. And he wanted to make sure that when you're doing your policies that you make sure you include how you're going to obligate the cost and how and who will be making journal entries. You have anything else to add to that for me? Consistently, he said that the records were not available to support the approvals of the journal entry. In one of the agency's case, the report reflected that someone was doing the journal entries, but there was no record to say that although an entry was made, someone approved of the activity before it was actually logged into the journal. And so you have to make sure that there are records that account for all of your fiscal activity that's occurring on the grant. So you have to have checks and balances from beginning, from the entry, from the receiving of the funds all the way until the funds are dispersed, right?
Yes, for example, if you want to do a journal entry to transfer the cost from program to admin or from one account to another account, you should have all supporting document and all the approval, just the same way when you incur an expenses or obligation. You cannot just make a journal entry, say the transfer $300 from supply to contractual services without any supporting document or approval.
Next screen, Victor.
Okay.
The next trend was that records, no, go back, Victor. The next trend was that records not provided for determining administrative costs.
In your book, you should have an account just for administrative costs. For example, if you have salary, you charging Lucretia to administrative costs. You should have one fund or one account number to record all those administrative costs. You don't just have in the payroll only, and then when you voucher, you just voucher Lucretia to admin costs without anything in your book showing that she's actually in the account for administrative. Because if you don't have records, then when the auditor comes, you cannot prove how much is your administrative cost for that month without you can just look at your book or your general ledger and find out what is the administrative cost instead of going from one voucher to another voucher to find out what and summarize it.
The next trend was that we don't have systems in place for recording and dispersing accrued leave. So most of you are giving your staff either sick time or vacation time, and there are no systems for how you are keeping accounting of the accrual of the leave and then as they are taking the leave. You don't have systems in place, which goes back to the first trend about having policies and procedures in place in order to account for all of the dollars that are being paid for out of the grant. So you have to make sure you account for how you're doing it. As Vanessa said a couple of weeks ago, whatever your process is that you're doing it, as long as it is allowable under the grant, you need to document that that's your process. And a lot of you are doing it, but you don't have anything written to say this is your process. So we have to make sure we get that in. The next trend is pretty much the same, that not only do you not have a system, some of you are not even keeping accounting of your paid leave and the funds that you're using to pay the accrual are not available. So you have to have a system in place, and then you all have to document what you're doing. There's an old saying in Head Start that if it's not written, it didn't happen. That is especially true for the area of fiscal, because all of the pennies need to be accounted for. Anything, Tony? Next screen. Still under the financial management systems, the next trend was that the fiscal manuals didn't include policies and procedures for determining allocability, reasonableness, and allowability of costs. Primarily, what Perry was doing was reciting the regs, and that portion comes straight from the regulations, that your manuals must include all of your procedures for how you're determining what's reasonable, how you are determining what's allowable, and how you're determining what's allocable. Anything else?
For example, if you want to rent a copier, you have to have procedures in place to determine that the cost to lease that equipment is reasonable by having at least 3 bids, and you choose that's one of the examples that you have the policy to include to determine that cost is reasonable.
The next trend is that your bank statements that are reconciled back to your general ledger. One big thing he saw across a lot of the programs was that they're not being reconciled by your program. So you get $100,000 and you disperse it between Head Start, $50,000 to Head Start and $50,000 to early Head Start. But you're not reconciling back to that program fund in your general ledger. So they were seeing, I'm not going to say just Perry, but they were seeing that there was obligations being made or entries, journal entries being made in the ledger, but it doesn't show where those dollars are being allocated to. And that's the same for the next one, that an agency-wide reconciliation was not easily accessible or could not really be determined by how you were doing your general ledger. Remember, everything has to fit into itself so that we can reconcile it back to that dollar. Right? Anything on that? Next screen. Any questions yet, Victor?
Let me check.
Okay. Was that Perry on?
Yeah.
Okay.
So he's on now.
No questions.
Okay.
Is there one?
Let's see if Perry is on.
Hand on?
His name was up again. He cleared it. Okay. See if Perry's ready.
Let me see if he's ready. Okay.
Yes.
We do have a question.
Yeah. Okay.
Perry responded.
See if Perry's going in.
All right. This is unclear on the bank statement reconciliation to program. How to demonstrate that when there is only one bank account.
Perry?
I'm here. I can't see the screen.
Okay, hold on. Do you see the PowerPoint up or you see us, Perry?
I see you in the corner, but the PowerPoint is being blocked by the logon information.
Okay. We're going to pull that down and just show the screen. You can see it now, Perry?
I can see part of it, but still.
Hold on one second.
Okay, now I see the PowerPoint.
Awesome. Okay, Perry, we have a question. Since Perry is on, everyone, Perry Davis from Western Kentucky has joined our presentation, and we're going to make sure we go through this PowerPoint with him. Perry, we have a question now. Let me pose it to you. Unclear on the bank statement reconciliation to program. How to demonstrate that when there is only one bank account?
Right. Allowed. Okay. It's not about the bank statement. It's about the general ledger report, because Head Start, it's its own program. Therefore, a general ledger report should be set up to account for the financial resources applicable to the Head Start program. And so what you're doing when you're reconciling the bank statement, and you do have multiple programs, you're reconciling each program to the portion of the resources in that bank account that's applicable to that program, not everybody as a whole. Because the Head Start program funding should be kept, quote, the GL separately. You then have one bank statement, but you'll have general ledger reports for each program that you have funds in that bank account for, and that's the reconciliation.
Okay. Thanks, Perry.
Hello?
Perry? Okay.
Yes.
All right, we're going to the next one, Perry. So now we're on the financial management systems trend for administrative costs.
Okay. Okay. On that particular one, the trend now was the administrative costs didn't include all personnel performing administrative functions, and I gave some examples where in some programs that we actually had an opportunity to review, positions such as the Head Start director, program director, HR staff, and even some of the fiscal staff that were directly related to Head Start and early Head Start were being charged as program costs. And so the functions, any position that has an administrative function on that particular job description for that position would need to be, at least partially allocated to administrative costs. Okay. Hello?
Okay, Perry, we have a couple of questions based on this slide.
Sure.
The question is, are we reconciling the voucher payments to the Head Start general ledger?
That's from Wardell. I can unmute Wardell so you can.
Okay, yes, we're going to, Mr. Glass?
Yes, ma'am.
Okay, we actually unmuted you so that you can pose your question. So go ahead.
Yes, my question is kind of along the lines of education. And this whole thing of cost allocation on the voucher. I think what I just heard is that the administrative costs or administrative personnel, there may be $100,000 of them, and it may be 100 people. It sounds like you want us to list the 100 people and the 100,000, as well as indicate what portion of the 100,000 is to be reimbursed by the voucher. Am I correct?
Well, it's really a budget issue where the functional allocation of the position has to be determined before the voucher can occur. And when you're developing your budget, and I think, for example, in your case, you'll have a 10% limitation on administrative costs, which means you have to identify all the personnel. And there's a definition of program administrative costs in the regulations in 1301 that you have to use. And generally, these positions here, such as the director, some portions of the program director, and HR staff are normally administrative costs. So when you voucher, they would also be vouchered as part of the administrative costs. This is more of a budget issue.
Mr. Glass? We're going to go back to Mr. Glass?
Yes, ma'am.
Did that answer your question?
Yes, it did. Thank you.
Awesome. Okay. Any more questions, Victor?
Yeah, we have a question from Dottie.
Okay.
I'm going to read it. It says, do you have an example to share of what you're looking for?
Well, In the budget, you identify your administrative positions when you submit your budget to the city. What I'm simply saying is that there were instances where these positions, which are normally administrative costs, was not included in those positions, and therefore, when you implemented the budget, the portion or all of the salary in the case for all the positions, 100% administrative costs, was not being charged as administrative costs, which it should have been. And when you're developing a budget, you're supposed to develop the budget with records. I think I mentioned that a little earlier, or maybe in the next slide, where you determine the administrative costs in your records that you're going to include in your budget so that it can be funded.
You have another question?
Yeah, we're going to unmute Scott here.
Scott?
Hello?
Scott, hi. You had a question?
Can you hear me?
Yes, we can hear you. You have a question?
First, my question is only regarding program management. Historically, in the 6 years that I've been associated with Head Start, we've always assigned it 100%, although we did change it for 2014 as requested. Can Perry further elaborate on why assistant program directors and program directors, a portion of their costs would be considered administrative?
Okay. The way the Head Start performance standards are set up, in the Head Start performance standards, we have each content area has an expert, and if that person is directly responsible for the supportive services in that particular area, it is normally program costs, such as your education manager, your health manager, your nutrition, those kind of positions. People that are once removed, meaning that they are not directly associated with the component services, more of a supervisor of those component services, are considered to be exactly what they are, administrative. And in the case of the program director, if the program director's job description is specifically 100% program direct services, meaning in other words they're directly responsible only for program and not performing no indirect functions in terms of support, then it justified it. My concern was when I looked at some instances of the job descriptions did not support a program manager, and that's why I listed it, being 100% directly responsible for components such as health, nutrition, disabilities, family services, and parent involvement, etc.
Team, we're all in this together, so we're going to go ahead and go to the next slide, Perry, okay?
You're going to have to change it, right?
Yes, we're changing them.
Okay.
All right.
Okay.
So the next slide is in regards to Davis-Bacon. Davis-Bacon instances where compliance with the Davis-Bacon rules weren't provided. Go ahead, Perry.
Okay. Okay. Yeah. The first one had to do with records. In terms of the active reports, which are the WH-347s from the which documents prevailing wages being paid to those workers. There were several projects, and for example, I cited a couple of where they had to do with issues on the playground, maybe playground equipment installation or something of that nature, where those records were not provided, and there were not copies of the prevailing wages from the Department of Labor that supported that particular work at the time the work was being performed. Because the the prevailing wages do change. One of the requirements on the Davis-Bacon is that you got to have a copy of the prevailing wages at the period of time, for the period of time that the work is actually being conducted, and I did not see that. There was also instances where contracts did not include the required language in terms of Davis-Bacon, such as the record retention requirements, the postings of the Davis-Bacon poster, and the requirements that the prevailing wages would be consistent with those set by the Department of Labor. Just some examples of some of the things that were not included in contracts.
For those agencies who we have recently done work through our subcontractor Globetrotters, we will ensure that the Davis-Bacon information is here with us that will document compliance with this finding. Next slide. Perry, this is the slide that deals with audits.
Right. In 2014, one of the major emphasis on the fiscal integrity monitoring is the audits, and that happened as a result of the new protocol that went into place in October 1. And so they're paying very close attention to your audits, and I did, as you can see on the slide, I've identified a couple of areas that were of concern. One was a corrective action plan to address the findings in the audit. As you are aware that any time that you do have an audit finding, that you are required by OMBA 133 to develop and implement a corrective action plan to address those findings. Mainly what I saw when I went to the organization was the management's response in the audit. You have a section in there where management can respond that says, this is what we're going to do. But there was no official corrective action plan that says this is what we're going to do and over what period of time and who would be responsible. So the audit finding must be accompanied by a corrective action plan that you follow over that period of time to ensure that the audit finding is corrected. And I saw that on a couple of instances. The records are not available to support corrective action. What I saw in some instances where audit findings perhaps were identified in 2011 that were actually completed, and the auditor in 2012 indicated that the finding no longer existed. Well, in some instances, I asked the program to give us the records that the auditor used to correct the finding. In other words, what documentation supported that corrective action. And in some instances, they did not provide that, including that information that was provided to the governing board over that 12-month period. I checked minutes to see if those things were being provided to the governing body that corrected that finding, and I didn't see, in some instances, not all instances, where those type of records were not available. And of course, I think we've had a couple of discussions on the summary schedule, which you are supposed to complete as part of the corrective action of an audit finding, as well as a management letter concern, that at the conclusion of the corrective action plan, a summary schedule is supposed to be completed, and that the auditor should see a summary schedule to indicate that progress has been made in completing the audit finding, or it has been fully corrected, and that summary schedule will state that. The other issue is management letters. Some instances, the auditor issued a management letter, and normally management letters they don't contain findings, they don't reach that level, but they do include what they call concerns and recommendations. I know on a couple of instances where management letters were actually issued, but on the part of the organization, they took no action to address the concern and recommendation. It was no documentation provided, at least. Now, the auditing requirements doesn't require specifically a corrective action plan be developed and implemented to correct those findings, but they do expect you to do something if there's a concern and or recommendation from the audit management level.
One question regarding Davis-Bacon. The Davis-Bacon Act documentation, is this only for wages that are paid for with federal Head Start funds?
Well, that's a good question, very good question. The Improving Head Start for School Readiness Act of 2007 says that if the facility is used by the Head Start program and that there's work that meets the Davis-Bacon compliance requirement, then Davis-Bacon is applicable. So it's not necessarily means that you'll pay for it with federal funds, but if it's a facility or the work site is used by Head Start, then Davis-Bacon is applicable.
This one is about the fiscal manual and the policies and procedures that were included regarding non-federal share and age payables. Perry?
Right. In some instances when we were visiting some organizations, of course we had no choice but review the fiscal policies and procedures manual. One of the expectations is with the non-federal share is that there are policies and procedures at a minimum that address the valuation of the non-federal share included in the GABI and the budget. So whatever, for example, if you have in the GABI personnel costs, supplies, equipment, whatever you have included, or even if it's a cash match, that you have policies and procedures that you use to address the value, how you place the value on the non-federal share. We did not see in some instances where those procedures exist, especially on the side of the in-kind. Now, certainly if it's cash and you're using the cash for personnel costs, you would just simply follow the normal personnel policies, not personnel policies, but your payroll policies and procedures, and the policies and procedures would delineate between what was paid for with the federal funds versus the non-federal cash. But especially with the in-kind, many manuals did not include how they value the volunteer services or the specialist supplies and equipment that was contributed by as part of the match in the Head Start program. On the age payables report, the reports were in most instances made available, but the problem was that they were agency-wide reports, and it was difficult to identify the portion of the age payables that was applicable to the Head Start contract versus the other programs that the organization provides for. Now, I have to admit, in some instances, once we went back and we asked for that information, some of the organizations were able to go back and filter, what I call filter, the age payables by program in terms of the Head Start program, that the age payables which we were actually looking for.
During the last review, I wanted to share, we had a meeting on yesterday, and one thing that came up is our attention that we're paying to the last review's findings and not having them to be repeat findings this time around. And I remember vividly about documentation of volunteer time regarding the value that's being placed on that time. And we spent maybe a good week or so before the review occurred trying to make sure that your documents lined up with what you have been submitting as the valuation of your volunteer time. So please make sure that you're looking at those records and that they align with whatever your policies and procedures are for determining the value of those volunteers and the tasks that they are completing for you in your programs. Next slide. Perry, this one is about the fiscal manual and the monitoring of the systems.
Right. As you are aware, the Head Start program requires that a monitoring system be developed and implemented, and that's both at the grantee and the delegate agency level. We weren't checking the monitoring of the delegate agencies by the grantee, but what we were actually asking for and checking was the monitoring of the delegate agency by the delegate agencies. And even in some instances where the delegate agencies may have had contracted providers. So I always would check two things in order to make sure that those systems were in place. The first would be the fiscal policies and procedures, because that is one of the elements of internal controls that we do monitor on the financial side, as well as the Head Start monitoring system, in which some agencies may elect not to include the fiscal monitoring procedures in the fiscal manual, but include those in the that monitoring system or organization-wide in terms of Head Start. Very few. I remember in my checking those, I didn't see monitoring procedures for the financial operations at the delegate level, and not the grantee monitoring the delegate, but the actual fiscal unit at the delegate agency monitoring itself, as well as the monitoring in some instances of the delegate contracted providers. The procedures didn't exist, and we didn't have, there were no records. There was no records to support the monitoring activities that had been conducted. So, because I know in some cases, folks may not have policies and procedures, but they may perform the activity because they know it's supposed to be done. So, when we didn't see it on either side, it was raised as a concern that you're supposed to, as a part of your internal control mechanisms, make absolutely sure that your fiscal policies and procedures that you've developed and implemented are being carried out as intended, and therefore monitoring would occur. Monitoring would ensure that things are being carried out according to those policies and procedures.
Thanks, Perry. Just remember that the key is that this statement says there's no procedure for monitoring the delegate agency's fiscal operations. A lot of times when you see in the protocol what the grantee should be doing, it's not really phrased as if it's something you should be doing, but all of this is applicable to what you're doing at your agency. So just make sure that when you see something that looks like it's a grantee-related question because it's referring to a delegate agency, know that those systems and procedures need to be in place for you as well. The next slide. The next slide is about insurance coverage for risk and liabilities. Perry?
Okay. There are, of course, you all know, and according to your contract, you are supposed to maintain a certain level of coverage. Now, most of the organizations that we checked did have all the required coverage: your general liability, automobile liability, your what else? Dishonesty, and it's one more, workman compensation. However, there were a few that didn't, and the primary ones that we found to be missing was the fidelity bond and employee dishonesty certificates. That insurance coverage was not provided for on the certificates, and that there were no policies in place to support the fidelity bond or employee dishonesty coverage. There were instances in which some organizations thought the professional liability was the catch for that, and that's not so. Professional liability is not the same as fidelity bond or employee dishonesty coverage. So you want to make absolutely sure that if you don't have it, that's something that you got to have, is to have fidelity bond or employee dishonesty coverage for those employees responsible directly for maintaining and handling resources, especially financial resources within the organization. Oh, the second part of that was the coverage, and most fiscal policies and procedures manual not only addressed insurance, but they also addressed the type of coverage and how much. So when we compared the requirements in the fiscal policies and procedures manual to the actual coverage, we did cite some instances where the coverage, and that was for the entire piece, did not align with the fiscal policies and procedures manual. So we would have, for example, general liability on the certificate at $1 million, but the fiscal manual may say that the general liability requirements were $2 million. So, you know, if you say it in your fiscal policies and procedures, then that's what you're supposed to be doing. Oh, okay. So moving on, the next one here is general ledger reports. One of the things, if you had an opportunity to review the 2014 protocol, the protocol focuses in terms of reports, mainly reports from the general ledger report. I mean, from the general ledger, which is your accounting system. Therefore, once you are funded in terms of the contract is approved, in the accounting system, the budget is set up, and you simply go, after that particular point, you obligate expense, and you record your revenue based on the budget. So at the end of the budget period, the contract period, which is November the 30th in your case, there should be a general ledger report run from the system to support the information that's submitted to the grantee on the final voucher. In most cases, when I asked for that type of information, I got a copy of the voucher. I didn't get a copy of the actual GL report, which should be used in order to complete the voucher so that they can be paid. So you want to be mindful of the whole process of using the accounting system to the maximum, is that the reports, the vouchers that's submitted, the data has to come from some source. The source of that data is the accounting system. So at the conclusion of a contract period, a GL report that closes out that program or that contract, either Head Start or both, and an early Head Start, should be generated, and the voucher then is created to be submitted to the grantee for your final reimbursements. And they'll be looking for closeout reports in terms of contract periods. The systems in place to support the provision of financial report to the governing body. The biggest one that we saw here was the not providing financial reports every month throughout the contract period. We all are aware that the Head Start Act of 2007 requires that every month that the governing body and policy committee receive a copy of a financial report. Now, what I tested here was a system in place to do it, and that was done because at that particular time, every month reports are not being provided. Most programs will provide reports based on the meeting period of the policy committee, and the governing body, whereas the meeting should not dictate whether or not they receive a monthly report. That is something that has to be provided regardless of whether the entity is going to meet or not. So you need to make sure that the system is in place and that they are receiving those reports, because that's an easy check. If you have a contract for 12 months, then they're going to expect to see 12 months of financial reports to the governing body and the policy committee.
So let's stop here now, since we brought up the reports for the policy committee and the governing body. I want to make sure that I pass Elaine's message on to you all, that the board should be informed about the need to update and revise the financial policies and procedures. 2, once the procedures are finalized, procedures and policies are finalized, you must present them to the board for approval. And 3, certify to us that us meaning DFSS, Elaine, that the board approval of the revised procedures and policies and when it happened, and certify, and we are going to be sending out a certification memo to let you know what all items we need to have certified that you've done it, and it needs to be reflected in your minutes. So make sure that you keep that in mind as you're going forward with revising your policies and procedures. Next slide. This slide is about financial reports and accounting records. Perry?
Okay. This was one of the ones we had a lengthy discussion at the grantee about, and this is the USDA funding. There were some concerns in terms of USDA funding. The first thing that we list in here is the reconciliation report of the budgeted USDA costs to the actual reimbursement. Every year when you submit your GABI report to your grantee agency, you include the projected for the grant period, for the contract period, the projected amount of USDA for that period. Well, after the conclusion of the contract period, 12 months, a reconciliation should be done to ensure that, number one, that if USDA money still exists or still on the table for that contract period, that you go back and make adjustments to make sure that you're using it for USDA and only for USDA. Almost every instance that we did not see such a reconciliation based on the contract period, and the monitors will be asking for documentation from the GABI. For the USDA, you put it in the GABI versus the reimbursement that you received during the contract period to do this reconciliation. It's a lot cleaner if you do it as an organization and have that information available in case there is some concerns about USDA in excess of what was necessary according to the GABI, so you can explain it. We were looking for that type of controls over the USDA funding and didn't see it. So that's something that you want to be very concerned about. The other thing was the actual monitoring from the Illinois State Board of Education of the USDA program. One of the questions on the fiscal financial reporting and accounting records section deals with that particular monitoring. I had several instances where the fiscal was not aware of the USDA monitoring report. Now, generally that's done once every 3 years. In particularly, it may not always be a disallowance, but there may be some issues, as we've indicated in some of the reports, that required fiscal to take a look at their policies and procedures. I heard Lakeisha say earlier about revising policies and procedures. As a result of this fiscal monitoring, you may have to do the same with your fiscal policies and procedures because some of the activities could have been cited in their monitoring as being concerns or weaknesses, which may require a revision to those policies and procedures. But in a lot of cases, the fiscal staff did not even have a copy or was not even aware of the USDA monitoring report. That was primarily the responsibility of someone on the program side that information was done. And this is not an isolated situation. This is really a team effort where if there is a USDA monitoring from the Illinois State Board of Education, and fiscal needs to be involved in it because the USDA program generates revenue, and revenue is financial, and fiscal has to be involved in this also.
So the key here is to make sure that all of your team is aware of any findings, not just the ones in fiscal. Remember, program and fiscal go hand in hand, which is why Perry, Funi, and I are jointly doing this fiscal webinar to show and demonstrate the importance that program and fiscal know what the other is doing and that we work in tandem to ensure that we have compliance across all areas. The next slide, again, is regarding USDA. Perry?
Oh, yeah. There was a couple of situations where the program wasn't taking full advantage of the USDA reimbursement, maybe because they were on a different type of USDA program. And the Head Start performance standards are very clear about this, and what it states is that USDA is the primary source of reimbursement for allowable costs associated with nutrition. And Head Start funds are only to be used for allowable costs not covered by USDA, which essentially says is that you got to exhaust all the USDA reimbursement opportunities before you pay for the cost with the Head Start funds. We did have several instances of that where the agency was not taking full advantage of the CACFP program, which essentially reimburses you for 3 meal types. And therefore, before you can charge a cost directly to the Head Start grant or the Head Start contract, you must take full advantage of those 3 meal types. Now, if the reimbursement is not adequate after you take advantage of those 3 meal types, then you do have the option to charge that cost directly to the contract. but not before. You have to take advantage of that. So in some instances, because agencies weren't participating in the CACFP program, we did identify concerns concerning using Head Start funds to pay for USDA meal service when there was a program out there to cover those costs. There was a few instances where disallowances were identified, and I think the way the Illinois State Board of Education identifies their issues with disallowances is that if it doesn't meet a test in terms of dollar threshold, that they don't reimburse you. That doesn't mean that the fiscal unit should not address the concern, because what you want to do is mitigate the risk of finding from that disallowance crossing the threshold. And what I saw in some instances was that the actual disallowance did not meet the threshold. However, there was nothing done on the financial side of the program to mitigate the opportunity from the disallowance occurring again, but also from exceeding the threshold, which I think is Illinois allows state $600 before they start actually reducing the amount of reimbursement.
Perry, we have a USDA question that I want to address now. The question is USDA. If we did not count our Head Start children in the USDA application in the past, what will we need to prove as far as documentation is concerned going forward?
Well, if you know that, then they need to be counted in the USDA program if you are serving them the 3 meal types, because the CACFP program is the only program that covers 3 meal types. As far as the way Head Start is structured, the Head Start Day is operation. If it's not been there in the past, then you need to either apply or amend your current contract for CACFP to get those kids on the CACFP program, because that 3rd meal type can't come out of Head Start until you pay to exhaust the USDA funding. So it's not really nothing you can do from the prior period, but for moving forward, you need to either amend the USCACFP contract to include those children or apply to Illinois State Board of Education for the CACFP program.
So the question came from David. So the answer is, moving forward, you need to include the Head Start children in your application to USDA, so that all of your children are accounted for under the allowable grants.
Right. Is that David from?
And if you can amend the application for the current year, please do so.
Right. Absolutely.
Yeah, it's another question to follow up. Is there a portion of the application that shows a financial/budget section?
Are you speaking of the USDA application?
In regards to the USDA application.
What was the question, Victor?
Is there a portion of the application that shows a financial/budget section?
Yes.
This is some of the past questions.
Okay.
Those are all the USDA ones right now.
Okay. Next slide. Again, we're still on the financial reports and accounting records. Perry?
Yeah, this is kind of like a follow-up to the prior section of where we was dealing with the frequency. This is actually the content of the financial reports as related to the Head Start and Early Head Start contract. These are the requirements: budget to actual, consistent with Head Start and Early Head Start, administrative costs, non-federal share, and USDA costs, and other costs. Now, I didn't include other because sometimes you may have, some organizations may have other costs and some may not, but certainly other costs, which which ties back to all the funding that's included in the contract. In a lot of instances, I did not see administrative costs being reported in terms of amount and percentages to the governing body on a monthly basis so that they can maintain their oversight that you would not go over the 10%. They would have budget to actual costs by organization in some instances, but not budget to actual costs based on the Head Start and early Head Start portion of the contract. So if you think about it, your financial report should mirror your budget that you submitted to the city, and as well as the GABI in terms of the reporting information to your board and your policy committee on a monthly basis. And we didn't see every month, every organization provide this type of information as far as the contents of the report, content of the reports.
Okay.
Perry, we have another USDA question that I want to get in now before we move on.
Sure.
When you say USDA costs, do you mean, you took it away.
Oh, sorry.
Do you mean we should report the USDA voucher reports or the cost of food and milk in the program?
Well, my assumption is that there's a budget somewhere for USDA that you've developed in order to provide for the USDA portion of the program throughout the contract period. So we're essentially saying the same things we would on the program side. There's a budget that you set up with expenditures, and the revenue would also have to be included to cover those expenditures. So it would be just like any normal revenue and expenditure report, but instead of being funded either with federal or non-federal share, it's funded under USDA only. So those are the costs that you'll be reporting. Your expenditures and your revenue that you receive during the reporting period that you'll report to USDA.
We're muted. Okay, Perry, one more for financial reports and accounting records.
Yeah. At the end of the contract period, you are again supposed to do a reconciliation of what was in the contract for Head Start and our early Head Start, the accounting records, and the audit. And I know that sometimes can be a little challenging because in a lot of cases the audit is not on the same fiscal year as the contract for Head Start, but it's supposed to be done. And this is to ensure that we have expended the resources during the audit period, as well as fiscal year, that you receive those funds. I didn't see where I did see. I remember seeing two organizations that had did that, but that's something all the organizations need to do in terms of making sure that the funds were used not only based on the GL and the contract, but according to the auditor in the period in which it was funded. That reconciliation is done at the end of the year. The next one here says the records not provided to support the obligation of costs of federal and non-federal share. In 2014, there's a question on here that's going to be further down, and you'll see it, that speaks to obligations. If you're going to obligate a cost, there has to be a record to show that the cost has been obligated. Now, they're going to ask a very specific question later on about that, which means that in order to answer the question in terms of the reports that support the obligation of costs, the accounting records must also be there to support it, especially in situations where costs are obligated at the end of the year that has to be liquidated before you submit the final reports for reimbursement, for your voucher reports for your reimbursement. You want to make absolutely sure that you're only requesting reimbursement for cost that has been obligated prior to or on or before midnight on the last day of the contract period. They will be checking for that because that is it's a situation where you got to have a system in place to do so.
Okay, Perry, next slide. Financial reports and accounting records again.
Oh,
This is regarding the 941s, Perry.
Yeah. Okay. This was a concern at some organizations that use what I call a third-party vendor to do the payroll, such as ADP or maybe somebody else. Just because ADP completes your 941, that doesn't mean you don't have a signed copy of the 941, either electronic or manual. That is an internal control issue. What I saw in a lot of cases was for those organizations that use the third-party vendors, instead of having a copy of the 941, they would actually have a copy of the information ADP used to do the 941s and not a signed copy of the 941s themselves. Remember that you can't delegate a responsibility of a report to a vendor. That is the organization's responsibility, and someone in the organization, an authorized representative of the organization, should sign all records that are disseminated either federally, to the federal government, state, or local governments that leaves that organization. And that 941s weren't available in some cases, and that's something that that's an internal control issue. And number two, it is an issue pertaining to not having the records necessary to support the cost charged to the program. The other part of that was having records and reports that segregate the costs of the 941s. For example, quite a few of the organizations operate multiple programs or projects. Well, the issue here is that the program that will be evaluated or monitored is not the entire organization. So if the 941 taxes have been paid out of Head Start, then the source records should be there to support the portion of the cost used to pay that tax from Head Start and early Head Start, and not just from the organization as a whole. In other words, there has to be some kind of segregation to support that portion that's being charged to the Head Start program. Procurements, policies and procedures. Most of the programs did have policies and procedures. However, there were instances that the policies and procedures were not in line with the administrative requirements for your contract, either in Part 74 or Part 92. At this late date, you probably going to be kind of tough to go back and amend them and get them approved, but I just want you to know that could be a concern if they are looked at based on the requirements for your procurement procedures in Part 74 and Part 92. Records in some instances, not all instances, were not provided to support open and free competition. You want to make sure that you do provide those type of records, and if you don't, you have justified why you sole source the service to a vendor without providing for open and free competition. Cost of price analysis records must also be provided. And one interesting piece about this is that a cost of price analysis must be conducted in connection with every procurement transaction. So it doesn't matter whether it's a single source or not, you still have to do a cost of price analysis, and the records must be supportive of that. Just a couple things here I want to mention. Fiscal manual didn't include requirements for contracts in excess of the simplified acquisition threshold. You know that there's two types of contracts or two types of procurement activities in the federal grant. One is less than the simplified acquisition threshold and one is greater. I just want you to be reminded that if you have a procurement in excess of the simplified acquisition threshold, that you have to do some things different than what you do for a procurement less. In some instances, there were contracts in excess of the simplified acquisition threshold where the award did not have documentation to support why they made that decision. So if you have a contract in excess of the simplified acquisition threshold and you did not follow all the requirements, you have to justify the award being made to that particular vendor as opposed to another vendor. Contracts did not include required language. One of the things all contracts will be expected to include is the language allowing the federal government, the awarding agency, or the Controller General to have access to all records. In particularly the Davis-Bacon contracts, I did test some of those to see if that language is included, and I did not see any instances where that language is included in the Davis-Bacon contracts that were tested. For those of you who have had contracts in excess of the simplified acquisition threshold, you also have to do what they call a contractor's evaluation. And because, again, it's not just a lower tier contract, it's a higher tier contract. So if it's in excess of that, you have to do a evaluation of the services being provided under that contract. Okay.
So this is the next slide. Perry, I'm going to turn it over to you about procurement procedures.
Okay. Procurement procedures didn't address debarment and suspension. There is a requirement for debarment and suspension to be done at certain threshold levels. I'm not going to, hopefully this won't come up in the review, but the auditor is one in particular that if the auditor is, regardless of the cost of what the audit is, if you're auditing the contract or your program based on A133, you have to do a debarment and suspension check. And of course the procurement procedures didn't address it, and in most cases we did not see records where the organization had taken on that responsibility to get those records. Okay.
Perry, we have a question we want to stop and answer now.
Okay.
I think we can unmute Scott.
Scott?
Yes.
Scott?
Perry, is the acquisition threshold $150,000?
Yes, it is. That is simplified acquisition threshold. Right.
Julie's next one.
And we have one more.
I can't unmute Julie.
Okay. Julie's question is, can you give us some example language that should be in all of our contracts to satisfy the federal requirement?
Oh yeah, Julie's next.
If you look at the protocol on the procurements, there is a section that specifically addresses what language needs to be referencing the availability of records. Under the contract, there's a section in the cost principles that talk about contracts that specifically give other language. That's there's two sections, so you want to look at the protocol itself. There's a section that talks about contractual language as it relates to access to records, and the other section is in the cost principles. I'm not sure what type of organization that you operate, but there is language in the cost principles that specifically address other provisions such as the time, the amount, and the financial responsibilities of the contractor and the vendor. I mean the agency and the vendor, I'm sorry.
Okay, thanks, Perry.
Sure.
Yeah, this one.
Julie, did we answer your question? I think we unmuted you. You can go ahead and talk.
Sort of. I just read all those requirements a million times. I'm just really not still so contracts need language in, and it would just be great if there was a standard language, like copy and paste this into all your contracts. Right.
If you look at the protocol on Fiscal, they actually structured one of the targeted questions around that language, and it says that in the protocol. So if you turn to the section on the procurements in the protocol, I think that's section 3. It does include the language that should be in all contracts as it relates to access to records.
Okay. And is that just referring to like subcontracts that we have, or is that like vendor contract, like, you know, even our audit?
Those are vendors. Contracts are contracts, right? Anytime you develop a contract, there's certain language because there's going to be records associated with the contract. Now, if you go out and procure goods and services, you're not getting something from someone that which you will have to document what they've done, other than give you what you asked them to provide to you. And even then, the vendor invoice would just simply support what you receive from that vendor. But when it comes to goods and services being provided, such as vendors, like health providers, I guess disability service providers, maybe child care partners, the records that they maintain on those children, the Fed should have access to those if they were provided under the grant that Head Start funds.
Thanks, Julie. Perry, we have one more. It follows the last one that you just answered from Julie. It's from Scott, who's an agency that has partners. They will be treating the community partners as vendors or subrecipients. They're still trying to work that out for the federal review. And his question, he asked the question because of the threshold that you just gave. But I believe that, Scott, if the answer that Perry just gave answers this question, let us know. If not, then we'll unmute you. And then you can ask. Scott, does that answer your question?
Yes. You said yes.
Yes.
Yes, it does.
Okay. Thanks, Scott. Perry, we're going to go to the next slide.
We got 3
regarding
minutes, right?
time. Pardon?
We got 3 minutes, right?
No, we have a couple of more slides.
Okay.
All right. This one is regarding time records and allocation of salaries.
Yeah. I paid a lot of attention to this particular one because looking back at some of the concerns in the monitoring 3 years ago, this was one of the ones that came up in terms of the personnel activity report. But the first part of this says records not available to support approval of the payroll by a responsible official, and that's important because the payroll is a payment just like a payment to a vendor. Therefore, once the payroll is determined for a payroll period, someone in the organization has to approve that payroll. And it then has to be signed based on the aggregate amount of payroll charge, whole or in part, to the Head Start contract. In a lot of instances, those type of records were not available, showing that the payroll that's being issued was actually approved by a responsible official. The response that I got in a lot of cases is that the employees supervisor signed the timesheets, but the timesheets are used to determine the payroll for the payroll period, and therefore it has to be, once it's aggregated into one payroll, it has to be approved, and that's the records that they'll be looking for, is whoever the responsible official that's been assigned by the policies to approve the payroll. Personnel activity reports were not provided in some instances where employees worked on multiple cost objectives. And of course, we all know that if you work on more than one program, and you share that time on that program, you must have personnel activity reports. I had some situations where, instances where I cited where programs, the management team didn't do personnel activity reports, but of course, the classroom staff and some of the other staff did them. It doesn't matter what position you're in. If you're working in a multiple program or project, such as Head Start, Early Head Start, and some of the other programs that's allocated, where an allocation system is required, you have to do the personnel activity reports to support your time in the program.
When we met with some of your staff last week to talk about monitoring those agencies that have partners, we discussed the PARs, and it was somewhat shocking that of the players in the room, most of them had not even heard of the personnel activity reports. And so We understand that that is a trend that you all need to really be paying attention to. As we said during the training, and we've said multiple times, PARs are very, very important for us to document what time is being spent and allocated to the grant. We're doing it around here. The last review, we sent those PARs out. If you need to have an example of a PAR sent to your agency, let us know and we'll send it out in the next CSD update, or we can send it to you individually if you need it. If so, just give me a call and we'll make sure that your agency gets it. The next slide, again, is regarding time, records, and allocation of salaries. Perry?
Okay. Yeah, spreadsheets provided that identify the percentage of time employees working on multiple cost objectives, but no records that identify the methodology. That was another one too. For example, programs that had staff that was working on multiple cost objectives would have a spreadsheet attached to the budget that says, this is my cost allocation, and it would have the percentage of time in each program. However, there was no methodology, reason why these percentages were determined. The spreadsheet didn't address the specific, for example, is the number of children in the program 50-50, so we're using 50% Head Start or 50% Early Head Start or whatever the scenario is. For that particular position, is the human resource person allocated based on the number of employees, and if so, you know, how many total employees versus the employees in each program. So the spreadsheets just simply had the percentages of the time that was being allocated, but it did not have the methodology that was used to determine what percentage of the time would be allocated. Some of the other concerns I had when I checked this is record errors in records and reports. For example, in a lot of cases, there was missing signatures on employees and our supervisors, time and activity reports, dates were not included. Well, all these things are important because your record keeping and reporting system has to support a certain standard, and that standard is, you know, defined in your administrative requirements that the records and reports will be accurate, they'll be current, and they'll be complete. The other thing too is it also puts you at risk of how do you pay an employee whose activity report or time sheets or time cards have not been signed by a supervisor. So, you know, you don't want to get into control issues, so someone needs to check very carefully the time sheets, personnel activity reports, and the time cards to make sure that, you know, all employees have signed them, that the supervisors have signed them, and that they are dated, because dates are just as important as signatures. Yes, I had a couple of instances where this did occur. There were some organizations who had employees in their program that salary was in excess of executive level 2, and I think that's $179,000, almost as far as compensation. So, you know, if that happens, if they check the IRS 990 and they see a salary in excess of that, which I did, they're going to want you to provide documentation, number one, to support that no part of the compensation is coming from the Head Start or Early Head Start contracts, either federal or non-federal. And so what I didn't see in those instances were the records that clearly stated and identified the salaries being charged to whatever programs that did not include Head Start or Early Head Start. And keep in mind, we were looking for records, not just necessarily reports. So you got to have specific records that identify how this compensation is paid if it's not coming out of the Head Start and Early Head Start program. And the key indicator here is going to be the IRS 990, and of course, you know, the W-2s that will be the next, you know, record that they'll pull, and then they'll start asking for the information to support that is not being compensated with grant funds.
The next slide is regarding the total compensation for personnel services and allowable personnel services that are allowable and reasonable. Perry?
I don't see that slide up yet. I still, okay, compensation. Oh, a couple things here on the compensation that you're going to have in place is a compensation policy. Number one, either in the fiscal manual, which it really should be, or in the personnel policies and procedures, which some of you may have included that manual. But you got to have a compensation policy that addresses, of course, the employees paid whole or in part with the grant, because the regulations require compensation policy and the cost principles. Salary schedules. In most instances, what I got for salary schedules were a list of the salaries of the employees. And that wasn't what we was exactly looking for. We was looking for a salary schedule that tells us where every employee is in terms of their salary in the organization. In other words, sort of like a schedule that says based on credentials, such as your education level and experience, the employee is either hired in this particular area of the salary schedule or is in the position now in which their salary is consistent with that. Not just a listing of the salaries of the employees by position, but an actual schedule that says if a teacher has a BS degree and 2 years of experience, our salary schedule says this individual will be at this level, and so forth and so on for every position. The other piece was that the fringe benefits was not included on the schedule that showed the individual's salaries, not the salary schedule, but since I didn't see a salary schedule, then of course the fringe benefit schedule was not available either. But the schedule of what the employee made at the time was provided in some instances. There was no fringe benefits included, so I didn't know what the percentage of the fringe benefits was charged as retirement, whatever. I guess the mandatory fringe benefits are pretty easy to calculate, but some of the other fringe benefits provided by the organization. Okay. Allowability, allocability, and reasonable costs. No records to support the determination. In some instances that you have tested it. In other words, how do you determine if a cost is allocable, reasonable, and allowable? You're going to have records to show that the cost that's being charged to the contract meets this test. And also in this particular section, there was no cost allocation methodology for the non-personnel costs, other than, again, the spreadsheet as I indicated earlier. So the spreadsheet did cover both the personnel and the non-personnel costs, but they did not include methodologies. And some programs did not follow their approval of the journal entries. The records was not consistently approved by what the policy required. So you want to make sure that all journal entries must go through a process of approval, and you want to make sure you follow those procedures. Right. This one, there are a couple of organizations out there, and this is only a few of them that has indirect costs. Make absolutely sure that the records that you have for how you charge the indirect cost, that you have records to support it. In other words, you're using an indirect cost rate that says we take maybe 2% of the total budget or 2% of personnel or whatever the situation is. You must be able to demonstrate that that money was used to support the provision of services at the indirect level for the Head Start program. So therefore, you got to have records, and then there were instances where we didn't see those type of records to support the use of the indirect costs. Okay. Non-federal share errors on the non-federal share records include missing signatures, dates, and descriptions. They are be looking very closely at, the signatures, the dates of the non-federal share, so they can tie it back to the appropriate, especially the dates can tie it back to the appropriate contract period. They'll be looking at the description as being adequate. I did see instances where general descriptions were used. For example, it would say transition. Every record would say transition, or every record would say volunteer. So it's kind of hard to tie that type of information back to an objective that had been established by the program. The use of cash match, be absolutely sure that you have from any kind of state agency or local agency, if you're receiving cash match, that you have records to support that. Number one, if it is federal fund, it can be used as a match to the Head Start or Early Head Start program. If it is and whether or not any portion of it is federally associated. Okay, we just got through talking about that. Records not provided to support funds were not paid for by the federal government unless, again, there are some funds out there that can, from the federal government, that can be used as matched to another federal program if the statute allows for that to be those funds to be used as such. Then you need the records to support that. And I know that there are some instances where some organizations are using funds from other state agencies or local agencies as match.
This next slide is regarding obligations incurred during the funding period, Perry.
Yeah.
And before Perry gets started, what I want to say very explicitly is that you cannot, under any circumstances, pay old bills with new money. And that has come up. We have been asked that question, and so we want to say very clearly to all of you, you cannot pay old bills with new money. Perry?
Right. Okay. This is a question that was not on the protocol 3 years ago. And it is, as Lakeisha indicated, obligations incurred during the funding period. A few minutes ago, we were talking about this from a records perspective, and we kind of repeated that here, that you must be able to show your records where you obligated the cost, not expensed it, not paid it, but obligated it by, at minimum, midnight on the last day of the contract period. So if you're going to liquidate that obligation and charge those costs to the prior period in that December reimbursement, you have to have records to show that you obligated it. They will be looking for that. If you're not using the general ledger and you're using the spreadsheet, then you're going to have to show or be able to clearly demonstrate that you had controls over that. In other words, that the obligation, if you did not have using the general ledger, that the obligation was not posted after November the 30th in the case of the contract period. Because if you're using a spreadsheet, it's kind of difficult to provide for internal controls. The other piece is the non-federal share. The records of the non-federal share are treated just like the federal share, and therefore the obligation has to be incurred and or the non-federal share documented and posted during the year in which the non-federal share was received. So if in an instance here is, if you obligate, say for example, if you have a volunteer and the timesheet is split between December 1 and November the 30th, you're going to have to segregate that portion of the time and credit it to each of the program years in which the volunteer service was provided. So you want to make absolutely sure that you can show that. If you're not using a general ledger report, it is okay to use an Excel spreadsheet, but you need to clearly show that the non-federal share that you recorded on that Excel spreadsheet and or in the general ledger, preferably the general ledger, that you have the records that's going to be used and can be used as the backup for that. They will be checking for that. And again, this is a question that was not on the protocol in 2000, and I think it was 3 years ago, whatever that was.
All right, Perry. Safeguarding equipment purchased using Head Start funds.
Right. Okay. In this particular one, there are 3 things here, actually 4 things that you want to make sure that you have in place. There were a couple of programs out there that had equipment. The primary type of equipment that the programs had was playground equipment. If the playground equipment has an acquisition cost of $5,000 or more, and a 1-year useful life, it is equipment. So therefore, you need to go back and make absolutely sure that whatever equipment has been purchased, look at the definition of acquisition cost to make sure you captured everything associated with that equipment. If so, then the records must include the requirements listed here on the screen in 45 CFR Part 7434 F1 I through Roman number 9, as well as 45 CFR Part 9232 D1, depending on the type of organization. Equipment inventory must be provided for according to those standards. The reconciliation to the property records, which means the inventory has to be then compared to the records listed in the first bullet. And your fiscal manual must include disposal procedures, because it may come a day that those disposal procedures would be, that the equipment may have to be disposed, so you're going to follow your disposal procedures. So you want to make sure that you follow those. Now normally disposal procedures may be found in your procurement procedures, because when you dispose of equipment that's been charged whole or in part to the contract, as well as the federal grant, that you want to maximize the return on the property that is being disposed of, so that will be done through a procurement.
We want to thank Perry for going through this wonderful PowerPoint for us that demonstrates some trends that he's found, or from our other consultant, Raleigh, and now our own DFSS fiscal monitors, who are doing the follow-up based on Perry and Raleigh's visits to all of your agencies. We have some questions that I want to make sure we go over before we get off, and Perry has to go. So we'll start at the beginning, Victor.
Yep.
So the discussion about aged payables is confusing, because conversely we are required to expend the funds prior to reimbursement. Is that all on that question, Victor?
No.
Reimbursement. Please explain how these competing requirements exist.
Right. It doesn't matter whether you pay for it with your funds. It's that the program is being charged the cost. The cost eventually is going to get to the program. So if it's not paid in a timely manner, it's a reflection on the program, regardless of whether you pay it directly with the Head Start funds or you pay for it with the your funds, and then Head Start pays for it. The cost still belongs to it's associated with the program, and therefore there's not a quote-unquote regulation that says it has to be paid in 30 days, but this is just a best practice that Head Start uses to keep from having Head Start having a situation where the community is saying that you don't pay your bills in a timely manner. So even though you're paying it with your funds, it's a reflection on the Head Start program, simply because it's Head Start that's eventually going to be the benefactor in terms of having to pay for that cost.
Thanks, Perry. The next one is, excuse me, can you give some examples of what procedures would look like to show the monitoring of fiscal operations? Do you mean procedures for doing an internal audit?
Well, I always tell programs that, in terms of fiscal monitoring, refer to what they do on the program side and don't reinvent the wheel. Kind of structure the procedures to be agency-wide, and what you're doing is, instead of monitoring the program activities, you'll monitor the same thing on the fiscal side, because you are required to have these policies and procedures on the program side. So the fiscal would simply be developed consistent with those.
Thanks, Perry. The next question is, in order to confirm that we are providing monthly financials to the governing body, would an email confirmation suffice? In terms of the department, we are going to be completing and developing a certification for you to fill out that these things have been done. Also on the table is whether or not CC and our program governance unit would suffice when you send information out to your governing bodies. We have not decided which route we're going to go with that, but be expecting an email from Elaine to confirm which process we will do now. The biggest thing is for you to ensure that those documents and reports are being given to both your board as well as your parents. Monthly and timely. Thank you. The next question is this only for equipment that is purchased with Head Start funds? Perry?
I have been, okay, I'm back. I thought I was muted. It's federal and or non-federal.
Okay. Perry said that is federal and or non-federal, the equipment that is purchased.
Or if it's Head Start has a federal percentage in it, or in terms of federal interest, and that means that it could be purchased whole or in part with federal funds.
Can you provide an example of a record for, I can't read all of that, Victor. Read it, Victor.
Can you provide an example of a record for allocable, allowable, and reasonable?
Well, it really starts with the obligation of the company, not obligation, I'm sorry. It really starts with the initial request for supplies and goods, that the records that's been signed for the request, as far as the request is concerned, is done based on the budget. And then the test, of course, that once you make the decision as to whether or not the amount is adequate as well as the price, that it is done based on comparison of costs and similar goods and services, and that the fiscal department does approve the allowability, saying that it is a part of the grant contract or budget. So it starts, it's really the whole process is incurring costs in terms of non-personnel costs to the contract.
Thanks, Perry. What's the next one, Victor?
Yeah, from Julie.
Can you give some examples? I thought we answered this one. Yeah. We did, Victor.
You answer this one?
We answered that one. That was from Julie.
That's it.
All righty. So those are all of the questions that were posed to us. We hope that you all received information regarding the trends. We're going to see if Vanessa is on and she has any closing words. Vanessa? She might be taking another call. Funi, do you have any internal? Funi is shaking her head no. So again, if you have any more questions or concerns that we have not addressed or you need more information for, please don't hesitate to either call me at 312-743-1891 or you can email me at lsmart, S-M-A-R-T, Penix, P-E-N-N as in Nancy, I-X as in X-ray, at cityofchicago.org. And I will make sure to forward that information on to Perry so that we can get a response back. Remember, you also have Funi here and Tiffany here as well to address any of those concerns. You all know that we have gotten our notice, and so the clock has begun, and we need to work together to ensure that we are in compliance across the board. I want to thank you for assisting with us in following up on some of these trends to make sure that we have them taken care of and corrected. With our fiscal monitors coming out now to visit you all, and just make sure that those documents are in order. The one thing that I want to make sure, or another one thing that I want to make sure that everybody's aware of is that wherever the records are to be reviewed, whatever location that is, that everything according to this protocol is in that location. We need to make sure, especially in the area of fiscal, that we get everything in one place that's full, completed, and can document what your processes are for your agencies in terms of your fiscal activities. Thank you so much. I appreciate all of you. And remember, we're all in this together, and we'll talk to you soon. Have a great day.